Deepika from CAD NEST. We are going to see management accounting concepts in this video. Before doing that, if you have not subscribed to CAD NEST YouTube channel, please do subscribe and press bell icon for notifications. So basically we have management accounting. We'll be starting from fundamentals of accounts. An account is a summarized record of relevant transaction at one place relating to a particular head. It records not only the amount of transaction but also their effect and direction. See, in management accounting we will be recording the transaction, but in turn, which is very important for decision making. So here itself we have to maintain it in a which is in a way that it should give us direction for further business. So debit and credit are simply additions to or subtraction from an account. So here debit nothing but sometimes it is adding, credit nothing but sometimes we are minusing. So it depends on the transaction as well. So fundamentals of accounts, we have three rules of account, that is we have already seen this: debit the receiver, credit the giver, debit what comes in and credit what goes out, and debit all expenses and credit all incomes and profits. So this we know already. So we'll be moving on for classifications of account. So classifications of account are basically three classifications. We have personal account, real account and nominal account. So here comes the actual picture. So when it is a personal account, the rules is like debit the receiver, credit the giver. So we have personal account, like I have my account, so Deepika account. So what it is, debit the receiver, credit the giver. See, I am investing capital of rupees 3 lakh. So to XYZ company. So XYZ company will become the receiver, Deepika itself will become the giver. So debit the receiver, credit the giver. Real account what it says, debit what comes in, credit what goes out. So here is like debit what comes in. Real account, for example, furniture. When we have purchased furniture, the account is like debit what comes in. Building is coming in, so building account debit to, if you are paying cash, it is cash account. Building account debit to cash account. It goes like this. Then we have nominal account. Nominal account, all expenses, losses, profit, gain, everything comes under nominal account. See, in debit side what we have to record is all expenses and losses. So in debit side we have to record all the expenses and losses. Credit all incomes and gains. For example, I am paying salary, so debit side should be salary. Salary account debit to cash or any bank. If you are paying through bank account. So salary account debit to bank account. It is very simple if you know this entire formula and few examples of these three accounts. So if you learn all these things, it will be very easy for further journal entries, vouchers, everything. So again we have few accounts like assets account, all the furnitures and then machineries. For assets account are also further classified as fixed asset and current asset, we know this. And liabilities account like long term liability, short term liabilities. Then capital account, revenue account, which is creating income, comes under revenue account. Expenses account like salary account, if you are paying salary for telephone bill, electricity bill, all those things comes under expenses account. So we have given some formula here. Asset is equals to liabilities plus capital plus profit minus loss. So this is the formula. What is asset actually is liability plus capital plus profit. If there is any loss, minus the loss. So if there is no profit, then liability plus capital minus loss. If there is only profit, no loss, then liability plus capital plus profit. So it comes into picture. Then profit, what is profit is revenue minus expenses is profit. Whatever the income comes minus all the expenses will be the profits. We know this, very simple one. Losses is like expenses minus revenue. What all the expenses we spent in that minus revenue, then it will be in minus in numbers, so that will be the losses formula. So we have again rules of debit and credit. Why we have to debit, why we have to credit? When you know the rules, then becomes still more simple for solving the problems. So why it is debit, why it is credit, we are going to see. Increase in asset are debits and decrease are credit. So coming to the point of asset, when it is increasing then it is debit, when it is decreasing then it is credit. So I can give an example for this, like I am purchasing building. So what happens, building is coming in, so building account debit, cash account credit as well. So when it is decreasing an asset, so I am selling it, so I am getting cash account debit to asset account like building account. So the decrease, when it is decreasing we have to credit, when it is increasing we have to debit it. So next thing, increase in liabilities are credits and decreases are debit. So it is liability, so directly opposite to asset we have liabilities. So when it is increasing, like I am taking loan from Canara Bank, so the Canara Bank account credits and the cash account or the my bank account will get debited. So this is how in case of liabilities. Then in case of capital, increase in capital are credit and decreases are debit. So if I am just lending loan or just I am investing capital, so it becomes credit, like they are getting my capital, no, for that company it is credit. Like for example, Deepika account credit to XYZ company account, like that. So when it is decreasing, no, like for example if you are decreasing in debits, it will be like you are not investing, like that. So in case of expenses are debits and decreases are credit. In case of expenses we have to, when it is increasing, expenses are increasing means it is debit, when it is decreasing means it is credit. So if you take any example like salary, when you are paying it, so it becomes debit, when you are receiving or you are not paying, that will be credit. Then increase in revenues are credit and decreases are debit. So it is opposite to the expenses account, directly opposite. So revenue, when you are receiving revenue then it is credit, when you are not receiving or you are receiving late means then it is credit, debit. So like this it goes. We have seen the rules and then classifications, again classifications of account, fundamentals of account, and the 3 rules mainly in this video. For more videos do subscribe our CAD NEST YouTube channel and press bell icon for notifications. Thank you.